The wheat short strangle setup has a pretty high volatility currently, or the CVOL, the commodity volatility index. And I want to show you my exact entry criteria right now, because obviously I'm still waiting for for something because I haven't opened the position. So I want to show you exactly my thought process given what's going on right now. So volatility is high and it increased due to the cold weather, basically. So for the most part, it's a non-critical reason for the volatility to increase, and at some point it will have to go down. Now the extreme cold weather can cause damage to the crop. So this is kind of the main concern why volatility went up and price went up as well. And we'll look at the graph and at the option chain in just a second. So my plan currently is to wait for signs of the cold storm coming to an end, and for overall volatility kind of taking a switch or going down for wheat. And currently volatility still kind of went up today, even though price went down. And the current kind of position I'm looking at, and again, this is probably going to change. 60 DTE, these are the short strikes for a strangle, profited 50%, 4 to 5 contracts per every 100k in capital, and will roll out and further out of the money the tested side if the position is at 50% a loss of credit. Now, if we take a look at what it would look like on the graph, this is it. And we can see we had pretty massive 2-up days, especially the second day on Friday, and then today price went down. And usually with commodities, when price goes down, volatility has to go down as well because they crash upwards. So when price goes up, volatility goes up. So if we take a look at the commodity volatility index for wheat, you can see the price did actually go up on those 2-up days, and then even today on the down day, it went up a little bit, but it's still an up move. So for me, I'm just waiting for some kind of down move, right? And hopefully this is nothing major that kind of eats away all the premium that the position has, or that the options currently have. Hopefully just a small decline in volatility, and who knows, volatility might keep increasing up and up again, so because the cold storm still is kind of in effect. And if you just look at the news, we can see here that the Chicago Board of Trade wheat futures pulled back after climbing to a 6-week high on Monday as worries eased about cold weather threatening U.S. and Russian crops. So basically, there's, I guess, less risk right now, but at the same time, you can see here the traders focused on the weather after a severe winter storm blasted the U.S. over the weekend. And extreme cold likely damaged winter wheat crop in most of Nebraska, along with the far northern Kansas and northern Colorado. And weather firm, this firm basically kind of reported on that. So we don't know exactly the extent of the damage, if there's an actual damage, and the cold weather is still in effect. So in the coming days, I believe we will see exactly what's going to happen. Just the fact that volatility hasn't gone down yet, it means that things are still pretty pretty easily can go upwards from here in terms of the price and volatility, that depending on how much damage the crops have. So in these situations, when you have good volatility, you just have to be patient, wait for the right moment. It's really as simple as that. And I'll give an example of a position I currently have, which I just waited for the right moment. I entered, and for now it's doing really, really well. So this is what the position would look on the option chain. We're looking at about 60 days to expiration. About 5 contracts will give you close to $2,000 in credit and only $5,300 in margin requirements, which is kind of the position size I would go for per every $100,000 in capital that I work with. So not too bad. That's pretty good. Take profits at 50%, which give us a probability of profit of about 86%, and a theta of about $49, which will mean we can be out of the position in about 10 days or so, which is pretty good. Now we'll see what's going to happen. I'm still not entering a position because, like I said, things can still change for the worse, or I guess price can increase, volatility as well. So another good example of, letting volatility go up and then just kind of waiting for a favorable entry point, I guess you would call it. So this is a put that I currently have open on crude oil. And what happened here is price increased because of what's happening in Iran. And then we had a massive down day, and volatility did decrease on this day. And I ended up entering the position at the end, or actually on Tuesday, yeah, at the very, very bottom here, right? So when volatility is still high, but it went down a little bit because we had some easing with what's going on with in Iran there, and with the U.S. Might be attacking there or not attacking there. We don't know, obviously. But the fact is, I just waited for a good entry, and then I entered, and then obviously I'm doing quite well right now. Instead of entering maybe at the very top here, or at any other increment here, instead of waiting for volatility to calm down a little bit and then entering a short put. Now this is a short put, so it's a bit different than a short strangle, but a very similar position nonetheless. So we'll see what's gonna happen. I'll keep you posted. Either way, we should probably have an opportunity here. I presume volatility is not going to drop all the way down, but who knows? Things can happen, And if it ends up not being a good setup, it is what it is. We gotta just go for the AAA setups, and if they don't kind of work out for us, it's totally fine. Then we just go and look for the next opportunity. So thank you again. If you have any questions, let me know, and I will catch you in the next one.